Dow. Join us as we get set for a new trading week in the end of the first quarter. Allianz Chief Economic Advisor Mohamed El-Erian. Mohamed, will you just come out when it's time and say all clear, or do we have to sort of read between the lines constantly with you? Where are we right now, my friend?
We're not in an all clear, and I will come out when there's an all clear, just like I came out warning. Look, I understand this temptation, this desire to call the all clear. Look, in just over a month, we went from a record high for the Dow on February 12th to the fastest correction in history to the best week last week since 1938. So we've been living in fast forward, and now we want to fast forward to a much better destination. But as you heard from Scott Gottlieb, there is a lot of uncertainty, and I think, Joe, critically, this is a valuable repositioning opportunity for investors. We are benefiting from end-of-quarter rebalancing flows. They are massive. They are giving us all an opportunity to reposition for what is still going to be a volatile outlook, unfortunately.
The reason that I ask, Mohamed, is we had this discussion earlier with Liz Young, and that was I was trying to calculate how much further to retest the lows. That would be a significant sell-off from here because we give back all of last week. And then how much further below the lows are warranted given the backdrop for the economy and the backdrop for the virus and everything else. And unless you're talking about a 2000, 2001 scenario or something akin to that, a 50% pullback high to low, it just seems like you're not going to call the exact bottom. And I'm wondering when you'd say, you know, we're close enough for this stock, we're close enough for that stock, we're close enough for this one, because you know how quickly you can miss them. And by the time you know there's an all clear, a lot of times it's 15, 20% above where you could have bought.
No, I agree with that. And so let's put the question in very sort of blunt terms. Do you buy the index, or do you selectively operate with individual names? If you feel it's the all clear, go out and buy the index. In fact, buy all indices, because some of them have been beaten up much more than ours. I don't think we're there yet. I think we're at a time when you should be selling names that are subject to bankruptcies. We are going to have bankruptcies, and bankruptcies unfortunately destroy the capital structure completely. And there are other names where I am comfortable buying them now. They have rock-solid balance sheets. They have a ton of cash. Their cash drain is very limited. Some of them are still accumulating cash. These are not only going to survive, they're going to emerge to a landscape that speaks to their strength. So it is a very selective game right now, rather than calling the all clear and going in for indices, or on the other side, just selling everything. No, we're not there anymore. That was a few weeks ago. This is much more for name picking and being very selective on both sides.
And just play out the scenario that you think is most likely, Mohamed. And I know that's difficult, but you know, we have these very sharp rallies. Some people would say they're bear market rally. It doesn't matter what you call them, but there will be more of those, and then more retests of the lows based on what? Based on economic data that we see coming in, or based on infection rates and mortality rates?
So we switch regimes. So in the next few days, we're going to continue to benefit from these end-of-quarter rebalancing. And they're huge, because people who have these automatic rebalancing are looking at the Dow down 24%, the S&P down 21%, the Europe is down 27%, so they automatically rebalance. So the technicals will support us over the next couple of days. Thereafter, it's all about the fundamentals and the policies. On the fundamentals, what we need is the doctors to tell us with some certainty, this is where we can stop the infections. And then on the policy side, we need the money to get into the economy. We have a well-designed program. We just need it executed. And there is no time to waste, because we are going to get bankruptcies. And remember, bankruptcies destroy the capital structure.
And Mohamed, what do you think is in the market when it comes to the timeline, at least in the United States, of people, quote unquote, getting back to work. And I'm not even sure what that means, but some version of normal. What do you think the market believes? Because, you know, we've had so many investors come on in the last week who literally were talking about mid-April or talking about the end of April as a time when we were really going to see people come back to work and reemerge to some sense of normalcy. You're now hearing the president even talk about June. You've heard Scott Gottlieb talking about mid-May, maybe where the curve bends enough that some people come back. What do you think is in the market? Because I think that's such a critical piece, because then it explains or doesn't whether the rescue efforts and bailouts will be enough, whether companies can actually persist and continue, and what even the summer therefore then looks like.
That's a great question, Andrew. And my sense, what's in the market is what's in us individually. We want this to end. We think we can see clarity. We keep on moving it back, but we tend to embrace a date out there where we will go back to normal. And also, and this is important because it happens in the market, we also tend to embrace the notion that getting there is not going to be too painful. Yes, we're going to make some sacrifices, but it's not going to be too painful. So I think there's two notions out there: an inclination to embrace a date specific and not put a massive boundary of uncertainty around it. And secondly, an inclination to believe that we can get there in a relatively low-cost manner. And these two things are going to be tested, and the question is going to be, at what point does the market realize that the uncertainty involved and the liquidity risk involved is much higher than what we have right now? That's why I worry about volatility, and that's why I see this as a repositioning opportunity as opposed to go out and just buy the index.